what we trade is more important than how we trade it. And that might sound weird on face value. Wrong. Doesn't it matter how we trade something? Other than fighting a trend, if there is a trend that's moving higher, like Coke, and a momentum trader decides to play a breakout, and a buy the dip trader decides to buy at support, they're both going to do well. Because what they have chose to trade is an uptrending stock, right? What you trade is more important than how you trade it. Now, that just really then begs the question, what stocks, what futures contracts, what sectors are getting your attention? Because where attention flows, that's where the money goes. And the first thing that we want to ask ourselves when we're talking about attention is, what has the best chance of follow through, continuation, whatever word resonates? And that's where we go right back to trends. The reason we all love trends, up or down, usually up, is because they tend to keep going. So once again, a breakout trader can benefit from the upward movement, and a buy the dipper like myself can benefit from the upward movement. But what has the best chance of moving in that way? So we're kicking off the first trading day of September. So I can look at the 1 month look back on the sectors. I can look also at the quarter to date. And it's going to reveal something that, if you've been watching these videos, you're probably already very well aware of. Quarter to date, take a peek at what's sitting at the top of this list. Yeah, we know mortgage rates are likely going to come down some, and we know that ITB and XHB tend to do better in a lower interest rate environment, which is something we're embarking on. KRE is starting to wake up. We still have those staples, the staples up in here, the utilities up in here, and real estate. Those are the defensives. Those are still up in there. What else has really had a great end of August? Financials, right? What else continues to be strong? Gold miners. What else had a great finish to August? Healthcare, right? And that takes you through your top, 8, 9 sectors. What is not here at all up near the top? Let's say we make the cutoff anything that's above 7%, right? What's not here? Tech isn't here. Semiconductors aren't in the top. Here's tech. Here's semi, right? So if I'm persisting on focusing on where Apple and Microsoft and Nvidia and Taiwan Semi are going, I'm not in the high probability part of upward movement. That's why things like Pepsi and Coke, right, which you're not going to hear many folks talk about, but this was the movement in Pepsi today. That's a $5.50 move today, $6 range on Pepsi. Coke continues to be one of the best trends in any sector and in any index, right? This is also part of the XLP. This is a staple. Well, it continues also to move higher. Not as much as it was for a while, but utilities are still a defensive place, and they're still moving higher. I haven't been looking at utilities as much. Another place we want to look, it was on that list, is gold. Gold miners. So when we get opportunity to buy dips in some of these places, while not as good as staples, I would definitely keep an eye on some of these names, like Newmont Mining. Right? So that's where what we trade is more important than how we trade it. Now you might say, okay, Rog, I get it. I've been seeing you, do this for a while. Pull the sector up. Make sure you're focusing on the outperformer. Don't get obsessed with your favorite name. If you've picked up that much, you're head and shoulders beyond what most traders are doing. So here's where the rubber meets the road. This is the August list of just the swing trades that we had in the mastery. And yeah, we had some losses, right? But what do we focus on? I think the best place to start is, what do we focus on? A lot of those names are up near the top of that list. Staples, Pepsi, XLP, Coke, gold, utilities, healthcare, Raytheon, gold, Russell, staples, healthcare, bonds, healthcare, right? Not all of them are winners, but that's where we focused, right? That's where we focus. And this is for trades that are usually, 1 to 10 days in duration, and focusing on actually, I want to show you all this too. Opening price and closing price. Notice that none of these were complicated spreads. All of these were long calls and or long puts. They were all long calls, I believe. And throughout August, and look at the kind of pricing we're talking about. So if you can buy something for $1.65, the question then is, how many contracts can you buy? 2? That's probably pretty reasonable for even the smallest of accounts. 22? That's probably pretty reasonable for medium and large accounts, right? But even if you're trading something like XLP or Coke, the liquidity is so great that if you wanted to trade 42, you'd probably be fine. So that's what I'm talking about here. And it's really not, the sectors that I'm focusing on haven't really in any meaningful way changed. So right back to focus on the outperforming sectors. You can look at the 1 month look back if you'd like, or the quarter to date, right? And then ask yourself, is what I'm trading mapping to account growth, right? And this was, and by the way, if you're curious about the sizing on this was an 18.5 account. So I wanted to trade something that would be, if I wasn't trading a cash account, which is what this is, if I wasn't trading a cash account, no pattern day trading rule issues, because this is all simply long calls, right? Long calls and long puts. No spreads, no margin issues, and therefore no pattern day trading issues. Also very affordable pricing, so even a small account to a Godzilla-sized account could trade them. All right, so I think this was 18.5. It was under 20. And then I have another account that I'll share with you all on Friday that is just the SPX testing that I've been talking to you all about. So if you want to see that, yeah, definitely check out the free video on Friday. All right, so that's where we're at. And as far as our continuation, it doesn't seem to have changed much from August. And believe me, gang, you know, where we are right now is coming full circle from where we were before we sold off for the yen carry, right? The end of the world. That's what everyone thought was coming. So yeah, we're getting a little bit of volatility as we're starting the first trading day of the fall trading season. Volume is slowly coming back. But at the end of the day, gang, I mean, put all this in perspective. Put this in perspective. That's the candle, right? It's so easy to get carried away with, oh my gosh, we're not making new highs. We're coming, sold off today. But please keep in perspective where we are as we're kicking off September. This is hardly a bearish market. It might be a bearish day. It might be a bearish 1 hour. It might have been a bearish 5 minute. But when you step back and look at the weekly or the daily, this is anything but a bearish environment. So keep that in mind. And then for now, until we get a little bit more certainty, focus on some short-term swings where you could be more nimble with maybe a 1 to 3 or maybe 2 to 10 day time horizon. Okay? And that's where we sit on this first day of September. Let's keep an eye on those relative outperformers and not worry about what's happening in tech and be more interested in what's happening in staples or what's happening in financials or what's happening in healthcare. Some very, very good looking symbols in XLP, XLV, and XLF. Let's get specific about those outperforming sectors. That's where we'll find the follow through. Hey traders, Raghee from Simpler Trading. Thank you so much for watching this video. Be sure to leave a like and a comment below. And remember, subscribe and click the bell icon so you'll get notified of the next update. And when you're ready to join me for live trading, be sure to head on over to simplertrading.com. I'll see you in the next update.